everyone, to this week's episode of Stock Wisdom Tips. Today we'll be talking about two of our favorite names, two of our favorite stocks in the S&P 500 and across the entire stock universe, Ford and GM. And look, it doesn't have to be one versus the other. We actually like both of these companies. And let's take a look at why. So, our central thesis, I had a buddy ask me, you need to start defining some of these terms that you're using. So, when we talk about thesis as in respect to a stock analysis, it's essentially the arguments, the points of view, the analysis that someone is presenting, whether it be an analyst, stock TV personality, someone such as myself. What are the central arguments for the conclusion, for the recommendation? So, look, I think everyone is aware the automotive industry is undergoing an incredible transformation today around electrification from ICE, the internal combustion engine. And in our opinion, it's going to be the largest margin expansion event for the automobile industry. Now, we have a background in manufacturing, lean manufacturing. An electric vehicle has about, several fold less moving parts, less complexity, less manufacturing complexity as well. So that makes it very, very easy, or easier, we should say, as well as less expensive and less complex to manufacture these vehicles. So manufacturing margins will go up, and obviously that's a huge tailwind for these companies. Currently, they are also suffering huge supply chain issues. It's really a perfect storm from a supply chain perspective. You've got huge inflation. You've got the war in Ukraine. You've got conflicts in, potential conflicts in Asia, such as Taiwan, Hong Kong, etc. Chip shortages, we've talked about for almost 2 years now. We're almost at peak these issues, so we're starting to, see the light at the end of the tunnel, and I think that's going to be another great tailwind. These two companies have some of the cheapest valuations from a PE, price to earnings perspective. That's a gauge, obviously, we use to compare stocks to see how expensive they are. They're in the single digits. So again, any margin expansion in businesses will mean an expansion in these ratios, PE ratios, price to book, price to earnings. And so obviously the stocks will appreciate. There's other levers of margin expansion as well, including self-driving vehicles, robo-taxis, investments in different types of, technology in the auto industry, which also could be huge for these companies. And then finally, we're not very keen on comparing these companies to Tesla for a couple of reasons, and especially up for us from a stock perspective. Tesla's valuation right now is at around $700 billion. Both Ford and GM are less than $100 billion. Tesla's a cult stock. It's a company that's currently valued, in our opinion, extremely high, at ridiculous levels, because of and it's a cult stock. So a little bit of irrational valuations there. So comparing it to Tesla doesn't really make sense. However, one can say it should be a fraction of perhaps the valuation of Tesla as the electric vehicle portfolios ramp up, and sales and, of course, deliveries for those vehicles ramp up. We should start seeing, like I said, margin expansion and valuation expansion. But again, let's not compare it to Tesla and say, if it were Tesla, if it were half the valuation of Tesla, it would be at this, because that's not realistic. Now, one thing we want to mention is that valuation, so market cap valuations, which is defined as the price of the stock multiplied by all the outstanding shares, That's a key figure that one needs to look at as well. So for, looking at the 5-year chart for GM here for the last, between 2018 and 2020 or so, the stock didn't fluctuate much. You see, the chart there from 2018 to 2020, obviously before COVID hit. On average, you'd say that's about $40 or a $58 billion valuation. So that's, steady state, if you will, without any black swan events like COVID, where plants were shut down, supply chain industry, where the supply chain function was completely messed up, etc. Now, at its lows, that's COVID's lows, it hit $18. Also, probably not realistic. $26 billion valuation, extremely low historically speaking. But at its peak in 2022, look at that. It went from 26 billion to 95 billion. That's, you're looking at, what is that, a 300% increase valuation from $18 to 65. So, so what we're saying here is that the central thesis here is that you got to look at valuations as well and compare valuations with the different companies to get a better read of where a stock is and where it will go. At today's prices of around $33, we're looking at almost a $50 billion valuation. And GM has a P ratio around, I think it's around 6. Earnings of about $6 a share. So you're looking at, $35, $36. Now, if it were to go to a 10 PE, right, at $6 of earnings, you're looking at a $60 stock. And again, something around 80, high 80 billion-dollar valuations. Similarly for Ford, very stable stock between 2018 and 2020, prior to March 2020. And we didn't put the values here because I want to go through an exercise of how do we calculate valuation. So if we look at Ford's price today, it's $12.80. Current valuation of $51.6 billion. You can get that from Yahoo Finance or Google Finance. And it's a simple, grade 7, grade 8 cross multiplication here. So if we want to figure out what the valuation of Ford would be if it hit $20, what you do is you multiply 20 by 51.6, and then you divide that by 12.8 to get your $80.6 billion number. Okay, so this is forward thinking. If Ford were to hit 20, if Ford were to hit 25, what sort of valuations would it be? So that gives you sort of an insight of, where you think the stock should be, but also looking at your PE ratios as well and your price to earnings or PEG price earnings to growth ratios as well. So we're not called Stock Wisdom Tips without the tips portion. As I mentioned, we like both of these names, and these are long-term investments. Okay, they have income, they pay some dividends, not as high as they used to, which we think is a good idea because they're reinvesting these dividends in R&D, and again getting their EV portfolio ready and out. But for fast money investors looking for a really quick buck, likely not the place for you, although just like any stock, they do fluctuate. And as we mentioned, watch the valuations closely. Quick disclaimer here, we're not financial advisors. Investing in stocks is risky. Do your research, consult professionals, and invest cautiously and wisely at all times. Please hit the subscribe button to encourage and support our venture, and our venture being educating and providing insight into the markets. Stock Wisdom Tips, wishing you financial success.